Well, that's the RBI Governor, and Latha is here now with more on the monetary policy as well as that warning from the Governor to NBFCs. Latha, the policy in line with what the markets were anticipating, a change in stance now leading to hopes of a rate cut perhaps as early as December. But more importantly, that reiteration in terms of the cautionary message that the Governor has sent out to NBFCs this time specifically.
Well, those are the three key takeaways for me. First is it's such a masterly act in going neutral but not sounding too dovish. It's a little difficult, you know, once you change the stance, the markets can run away with their exuberance. But the quotes caveated that dovishness so beautifully. Look at the quotes that he said. Even as there is greater confidence in navigating the last mile of disinflation, significant risks, I repeat, significant risks to inflation persist. And then another quote, we need to closely monitor the evolving conditions for further confirmation of disinflationary impulses, saying that disinflation is not good enough. So that's, I think, excellent, not allowing the markets to be exuberant. And we saw that play out in the stock market, not too much exuberance. Again, next cut is that in December. It's usually logical. You change the stance this quarter, next policy, you will cut rates. He has hedged himself again very well over there. The MPC is unambiguously focused on getting inflation, aligning inflation to target. The other words are the same as the previous stance. What he has added is the word unambiguously, and it was repeated like 3 times. So in all 4 times, we got to hear the word unambiguously, something absent in previous policies, driving home the point that, we may not cut as early as December. In fact, to buttress that point, Deputy Governor Patra in the Q&A said that we want to cross the current hump of inflation before we consider the next step. Now, what is this current hump? Actually, the September inflation number will come out next week, October 13th, and October 14th, and that's expected to be 5.2%. You know, the NPC's target is 4%. And the October inflation number, which will come out next month, is expected to be again 5%. Now, those are the 2 numbers that will be available to the MPC when they go to the policy on December 6th. With that 5% readings behind them, they have a very good chance to say, let's wait to see it's getting back to 4%. So my sense is that December is more likely not than, expect a rate cut. No rate cut would be the call going by these statements. And finally, reading the Riot Act to NBFCs, MFIs, HFCs. Now, the important point is that the words that they used, RBI will not hesitate to take appropriate action, though we think self-correction is the best. Now, that's a big threat. So another round of raising risk weights if the number of loans per person doesn't go down, or the number of risky loans or sharp practices don't go down. That warning has come out very clearly. So those who own NBFC stocks also did not celebrate much today. There is something to celebrate because the cost of money goes down for NBFCs. They borrow from the market. But people didn't celebrate much because this hidden threat came in. And finally, a point which really I took away is he's very confident on growth. That 7.2% was argued with such vehemence that now I'm inclined to be a little more optimistic about growth.
All right, Latha, many thanks for joining us. Those are the highlights there of what the MPC has delivered in its policy today. Let's talk about the stock markets. They did perk up soon after